Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Well, we have to talk about the volatility from yesterday because that was interesting. We have the jobs number as well. Today, we have Elon Musk tweeting weird things. We have some earnings from Costco yesterday after the bell. So a lot to discuss on our show. Our guest today will be Dan Russo, the Chief Market Strategist at Chaikin Analytics. He'll join the show at 8:35, and he'll bring some charts with him. Before I throw it to Joel, I want to remind all of you about the Benzinga FinTech Summit coming up in San Francisco, November 14th. If you go to bzsummit.com and enter the promo code PMPVIP, that's Papa Mary Papa, and very important person, VIP, you will get a free ticket to the Benzinga FinTech Summit. So bzsummit.com, promo code PMPVIP for a free ticket. I'm told we only have a small number of those left. And also don't forget to check out Benzinga Pro. It is Benzinga's real-time news platform with real-time quotes, real-time news, SEC filings, the works, you name it. If you go to pro.benzinga.com, enter the promo code AMPRO, that's Alpha Mary PRO, you will get 25% off a Benzinga Pro subscription. And now, Joel, what is happening in the overnight session after yesterday's day?
Oh, a big old range here, Spencer. We have about a 15-point range. We're trading unchanged. I'll give you a pre-market high of 29.1550. I have absolutely no level there. There's nothing on the upside until yesterday's high at 29.26. Our pre-market low is 29.00.75. I have absolutely nothing there until we get down to yesterday's low at 87.75. A lot will be dependent here on the jobs number. Crude still hanging out in the mid 75 handle, up 30 cents at 74.63. Gold trying to rally once again, up 590 at 1207.50. Silver hanging out up a dime at 1470. And I don't think my Bitcoin futures quote changes because it's at 65.40, down $2.50. Dennis, how about the ARBs? They really reined in that Bitcoin, didn't they? They got on the futures exchanges and then they just got in there. And that thing is it's dead. It's dead.
Volatility is gone from it.
Man.
Volatility is gone. Yeah. Anyways, I want to throw this back to Spencer. We have a very important announcement here. So Spencer, we'll throw this back at you.
Oh, I thought we were doing this at the end, but we can do it now. Okay. The important announcement on today's show is, drumroll please, it is Joel's birthday. You thought you could sneak it by us. He's not in the office today. He's doing this show from home. He thought he could sneak it by us without us knowing, but now we know everything. I saw it in my Benzinga Pro this morning. It said Joel Elconin's birthday. He's turning 62. So happy birthday.
Yeah, right. Did Brent tell you?
62 years old. I thought you were only 60. You're 62,
First
Joel?
of all, did Brent tell you?
No, actually, Brent did not tell me.
He's fired. Because he can get right off the desk right now. He can grab his jacket and he can go home.
I swear on my GE position, Brent did not tell me.
Who told you?
I cannot say, but.
Okay. No, I'm double nickel, man. The 54 puts are worthless, man. Buy the 55 calls.
Are you really 55? 55? We were joking with the 60. I thought 55 though. Holy cow. That's a special number too, isn't it? What's a 55? Isn't that like something special?
I mean, don't I look great for 55? I mean, I did my 5:30 slam, and you know what? You know why it's not a special day? Because every day is my birthday. Every single day of my life is my birthday. Working with Dennis, working with the people at Benzinga. Great wife, great kids. Every day is my birthday. So There's no difference. All right. So let's get to the important things here. Let's talk about the markets.
We'll talk the markets. I think we got some internet problems here because your audio is really choppy. It might mean my audio is really choppy because I'm coming through on Skype. So somebody's audio is choppy there. So hopefully we can work out through those details there. But yes, the markets here don't stop for Joel's birthday. We stopped for 1 minute for Joel's birthday though. So happy birthday, Joel. 55 years old, very impressive. I hope I make it to 55. Jump over here to individual stocks. There was a lot of movers yesterday. There's a lot of little movers here this morning. Let's start with the pot stocks. We never get the pot stocks some love. Let's go over there to the pot plays here. IGC collapsing this morning here again. 3 days ago I was on the show. The stock was 12, and I was saying I think this is $2 within 6 months. I should have said it was $2 within 6 days because here we are. We're back here $4.84. So I took a little heat on that call because it went to 14. Couldn't call a top, but I'll tell you now it's ugly. We'll have a bounce here eventually. Probably have a bounce, but I'm still sticking with my $2 price target 6 months out.
Fill some gaps here, right? We had a gap in the $4 handle. So if you could get down to, what do we got? 471. We're pretty close to that right now. That fills the gap. I don't know how many shorts are in this market because this thing is like so hard to borrow and so expensive. But I like the gap fill. These things are really hard to trade. I did a little bit with the InBev, and I did a little bit with this other stock, and I did okay. It's just a $9, $8 stock that moves up and down $2, $3 each day. The only thing we kind of concurred on the pre-market show, InBev is around its engine.
Holding up.
Yeah, it is. It's holding up. And this thing breaks out over 10. Yeah. Where are you going to go after that? So that one looks the best out of all of them right now. Really,
I think so too. Yeah. And because the other ones have already died off. The IGC has died off here. We saw, Tilray, we know topped out the 300 and is never, I don't think ever getting back there again. But you look at a lot of the other ones, they've leaked here. CRON is down significantly from the highs. CGC and Bev is just hanging out near the highs. Come back up. I always say third time's a charm. It came back up here once to $10, second time to $10, third time trying yesterday, didn't quite get up there. But if it could break out over 10, it would be in full breakout mode here. So you know what? I'm not putting. I got the long-term $2 price target on this one, but short-term, this thing actually looks rearing to go. Could go higher here, so I don't want to be short this.
InBev they also had news, and they will have news next week. So the news from yesterday was that they're lining up pre-orders for their cannabis drinks. They're going to announce those whatever CBD products they have next week at the North American Convenience Store Show in Vegas. So expect to see more details next week on InBev.
So I don't know where this goes short term. Like I said, this actually looks pretty good to me short term here. I still think long term, I think eventually gives it back, but who knows when that top is. And this thing, the trading action right now, and I've kind of been bearish here, up here at $8-9 here for a while, but the trading action is telling me it's been up here for too long. They don't give you this many chances to sell the top. That's why I think it could actually break out. So definitely, I've played it from the short side a couple times in here. Actually, I was even playing it from the short side last night, but I covered it, and I'm glad I'm covered because the trading action here just tells me it wants to go higher.
All right, trading up 33 cents at $8.89, keeping an eye on the $10 level.
Jump over here. There was some other pot news here too, and I don't know if any of these stocks are going to take off, but Coors Tap has been talking about this deal with joint venture with HEXO, which is on the Toronto Stock Exchange. Not sure if you can bring that up. It's not doing. I'm looking at it on Toronto this morning. It is bid up here this morning, but pre-market in Toronto is pretty. There's not a lot of action usually in the pre-market, but they are trying to finalize that deal for a cannabis drink there with HEXO. So there is competition coming for InBev. There's going to be a lot of companies that are coming out with cannabis drinks. We know that. Obviously, this is one of the first ones, so maybe they got the first edge here for being the first one. But there's going to be some competition coming for them. So HEXO, if you're trading in the Toronto Stock Exchange, is one to keep an eye on here today.
Have you been able to get any trades off in the Toronto pre-market?
Yeah, I've been trading the Toronto pre-market a little bit. It's very thin. Like, I'll give you an example right now. So Afria is open in Toronto. So it's open right now. So it's not like here. And Afri is one of the majorly traded stocks in Toronto right now. It's one of the big pot stocks. That's APH. The market right now in Toronto is 1647 to 2080. So it's a 4-point spread. So there is just not much in Toronto.
Right, okay.
So they're thin. You know, somebody's bidding it up a little bit there. There's nobody even selling it all. So I don't know. It's a newer thing. Toronto's just got the pre-market here recently in the last year or two. I didn't even know about it till like 6 months ago or a few months ago. So because Toronto's never had a pre-market, but they do now. So you can trade in pre-market, and they have after hours until 5 o'clock, an hour after hours, an hour. Unlike us, we have 4 hours after hours.
Right.
They go 4 to 5. So there is some action in the pre-market after hours sometimes, but it's like you got to really work for the prints because there's just not a lot of liquidity there.
You know, thin market.
They are super thin.
Yeah, I mean, we could talk about this for a couple hours, but thin markets, you can get done. I mean, if you have an edge and you can use your price and obviously using limit orders and stuff, but you can really tell if you're right or wrong when in these thin markets too, or if you're running into liquidity. So
I like thin markets. That's why I like trading pre-market after hours. That's all I used to trade. Oh, back in the day, well, I've been all over the place. I trade thicker stocks too, but I used to trade a lot of thin stocks. Remember those little small cap filters we used to run? And we used to look, see if we could find any buyers in the market and, trade. And obviously, we try to just see, with big bids. We're looking just reading the book. Big bids, big offer. That's the way it was back in 1999. Oh, there's a big buyer in the market. He might push the stock higher. So we'd buy along with the big buyer. And if there was a big seller in the market, might push the stock lower. We'd sell short along with the big seller in the market. They didn't really conceal their intentions very well back in 1999. Now, obviously, they use algorithms. They do different ways because they know there's traders that, hey, if there's somebody buying today, I'll buy along with them.
We helped them. We actually helped them get the others done.
We get them done.
We provided liquidity. Liquidity.
Oh, for sure. Well,
okay,
anyway,
so
we digress back. We always digress on this show. So let's take this conversation to Tesla. Because what the hell is Elon Musk doing? I want to know what is going through his head. This is crazy. Give us the news from last night, the tweet that is shaking Tesla down 9 points here this morning. What is he doing?
I just want to say that the Short Seller Enrichment Commission is doing incredible work, and the name change is so on point.
The Short Seller Enrichment Committee. So here he is.
Commission.
He gets the settlement with the SEC, and it was a gift. I mean, he couldn't have got off easier, in my opinion. And here he is, before the settlement is even finalized, he's on Twitter and making fun of the SEC. He's a CEO of a public company. What other CEO of a public company comes out and makes fun of the SEC? Nobody. Nobody does that. I mean, you're asking for trouble. Why? What? It's all risk return. I mean, the markets are risk return. It's risk return when you're running companies there. It's all risk. That tweet is all risk with zero return. I don't know what he's doing. I don't know what. They can't rein him in. They can't bring him in. He's the biggest risk to the company. So, yeah, you can say, okay, are they going to go prosecute him or anything for this tweet? No, but it's telling you that he didn't learn anything. It's telling you that he will not keep his mouth shut. He's going to say exactly what he wants, whenever he wants. So it's just a matter before he says something else that he's going to get, more charges against him for. So this is the biggest risk to Tesla. The cars are awesome. He's done, I won't argue. The guy's a genius, but socially, man, the guy's socially inept if he's doing stuff like this. This is just ridiculous. Keep your Twitter account, shut it down, bring this guy in because he is not helping stock. If he would have never had his Twitter account going after that last quarter, when they talked about profitability, the stock went up to 340 that day before he said, about the buyout, potentially at 420. I think the stock would be 350 or 360 if it wasn't for all Elon Musk's shenanigans on Twitter. So I'm absolutely, and I'm not even a shareholder. If I was a shareholder right now, I'd be very upset. This is ridiculous. He needs to stop tweeting.
Yeah, I mean, I don't even know what analogy to do. This is like you get in big trouble in high school or something, and then you go to the principal, and the principal cuts a deal for you, and you get out of trouble, and then you just go around saying, should never got in trouble in the first place. I mean, I don't know.
No, it's worse than that. It wasn't even about trouble in the first place. Saying the principal is, basically making fun of the principal. To his face, because it's on Twitter. It's not even like you're making fun of the principal in a closed room. Let's make fun of him to his face. He just let me out of trouble. He just basically gave me a slap on the wrists, and now I'm going to go make fun of him to his face. What are you thinking, man?
I think I think Elon needs to mellow out. I know a few drinks he could probably go by that.
Oh yeah, we know how he mellows out. All right, let's just talk about the only way you can talk about this is technically, because fundamentally, who knows what's going to happen? You're filling a gap down to 278. So if you were waiting for that gap fill, there it is. The low on that day was 260.55. The close on that same day was 264.77. So I say this is in a trading range. I just didn't. If you short this thing at 315, I'll bring it in, but 278's a gap fill, and just keep an eye on your Twitter feed. What else can you do? I don't do much in the stock, and now you know why. So I'm glad you're not in it anymore, Dennis, because then we don't have to hear you complain about it. It's just tough. It's just I've never seen anything like this, and he's got to stop. And he's really opening up the door for more trouble. That's that.
Oh, I know the internet cut out there for a second, so hopefully it's working here now. Yeah, because I totally lost you there for about 30 seconds there, Joel. So hopefully that's.
I think we're okay. Wait, Dennis, what just happened? Did you mute yourself or something?
Yeah, I'm here. Can you hear me still?
Yeah, did someone just walk in behind you?
Yeah, did you see that?
Yeah.
I don't think anybody else saw it.
No,
I don't think my wife realizes the camera goes that far.
I've
for
got
the
the
whole world
charts
to see my wife, she walked in to
Nope.
hand me a note.
I've got the charts up. We're okay.
I don't think they did, though. And audio's coming in and out. We apologize for the
Yeah.
audio. We're showing a chart, so you didn't see my lovely wife.
Okay.
I'll have to give her a warning next time. Anyways, at least she was dressed. Let's move on here. Jumping over here, Virtu Financial. I wanted to talk. I have this on my list. I've talked about this. They had rumors that they were going to be buying IG or what was what's the company yesterday?
ITG.
I didn't write it down. ITG?
Yep.
Big time pop there for ITG yesterday. Just rumors though, right? Nothing confirmed here?
Nothing confirmed.
Okay, so ITG takes off. Virtu got a lift on this as well. I think Virtu would also have lifted though, because you had a spike in volatility. And like I said, this is my hedge. I've got this in my long-term investment portfolio. And basically, instead of gold, everybody says, "I'll have gold for insurance." I like having Virtu Financial because when volatility picks up, when the markets start going down, VIRT actually lifts. So I like it as a defensive play in my portfolio. Had a good day yesterday. Probably a lot to do with the ITG, but also to do with the VIX exploding yesterday. A little bit of risk back in this market, which is a nice segue to talk about the Momos and how they became no-nos here once again.
Well, could you tell me about this ITG here? I did not.
Here's the headline, Spencer, from yesterday.
The headline is that Virtu is exploring an investment in ITG or a deal for the company outright. So
is it I don't know about this firm.
You don't know ITG?
Oh, you want
no.
Okay.
The audio, I've completely lost you guys, so I'm hoping you can hear me
right
now.
I got you, Dennis. They're a brokerage, right? They're like an online broker.
ITG is, and it's so okay. So ITG, we'll just go to their website, is a global financial technology company that helps leading brokers and asset managers improve returns for investors around the world, power their traders to reduce the end-to-end cost of implementing investments.
Okay. I'll take this out.
I know they do great analysis, market structure. The people over at ITG are very smart people. So, I mean, Virtu is buying in and they're trying to become really what Citadel is. I mean, Citadel, we know, is the gun. Citadel does, I don't know how much of the volume here now. They're the huge off-exchange market maker, basically taking the other side of almost every retail order. Virtu is trying to chase them down to become the #1 trading firm as well, and they're not afraid to acquire growth. They acquired Knight, to get a hold of their off-exchange market-making business, which they did, which was a great acquisition for them. And they're looking here now at expanding as well. So Virtu Financial, what Virtu is a high-frequency trading firm. but they've got a lot of other stuff on the go there too. So they're looking in technology, looking at a lot of different things. But they're a trading firm. They trade for themselves. They're basically, souped up proprietary trading firm, and they're doing the volume. And we know in volatile environments, like I know the Virtu Financial, like I understand that business because I'm basically running a similar business. I'm not running on a high frequency trading scale, but we've run a lot of similar strategies, arbitrage, stat arb, all that stuff. And I know when volatility starts to spike, I start to make more money in my trading. So Virtu is the same way. Your prop shops make more money when volatility increases, and high frequency trading firms make more money when volatility increases. So volatility starts to increase, this goes up. That's why I like having Virtu Financial in my portfolio. Not only do I get a nice dividend, it's a nice hedge. I get a nice dividend of 4.22%. I believe they are growing. And when volatility starts to spike, the stock starts to show life.
Okay, all right. S&P's weakening here ahead of the jobs number, down 3 points at 2904.75. Really, we're really in kind of a vacuum area here, as I see a lot will be determined by the jobs number. Just real quick, Dennis, you see Interactive Brokers is going to list on the IEX exchange.
Yeah, when are they doing that?
I don't know. Greg Kutsuyama's talking about it.
They announced that a while ago, but when is that coming? Is that today?
I don't know if it is today. Dennis, do you send any orders there?
Interactive Brokers? Or to IEX?
Yeah.
I have it. Yeah, I send some stuff. I mean, IEX Public Exchange, it's in my routes. Interactive Brokers has it there too. So you just drop down, you can send it to IEX. I sometimes use their midpoint. I wouldn't send it, I don't really send the orders. I sometimes use their midpoints though. Like I'll go try, especially when we had the tick size pilot. I've got Coda Markets, which is one of their competitors. I try to use their midpoint service. I also try to use the IEX midpoint, see if there's liquidity there. Goldman has their own midpoint service as well. So it's just another route. So it's another exchange to go try to find liquidity in. And sometimes you can find some liquidity in IEX. So love those guys. Brad Katsuyama, great guy. The people who are running that firm, great. They've had an uphill battle. They're trying, to start up an exchange. It's difficult. It's difficult to get the traders over there. It's difficult to get the liquidity. But, I love what those guys stand for. Those guys are all great guys. So I'm a big fan of IEX. I hope that, they can continue to grow it. But it's difficult to grow an exchange from the beginning.
We'll have to track down, Spencer, remind me to track down maybe John Ramsey next week, and I believe he's the president of the
show a couple times.
Yeah, let's get him on and get some updates on the IEX. All right, Dennis. 7 minutes before the jobs number, 6 minutes before you need to hop off. So I'll let you lead the way here.
Jump over to some of those momos. We were going to talk about those for a second before we started going into the Virtu. I mean, the writing was on the wall here for a few days. We talked about Square. We've talked bearish on it the last couple of days on the show. Yesterday, it actually has the fall. So it was setting up. It got over 100 3 times, could not sneak over it, and then started to leak. And then all the momos. So it was a victim of the overall money coming out of momentum stocks. Roku, awful day for it yesterday, down 5 points. But we talked about this 2-3 days ago. So if you've been listening to our show, we were anticipating this coming because you could just see them starting to leak. You could see that there was money flying. We've been talking about it for 3 days, the money coming out of the momentum trade and going more into the value trade. This market is playing defense here right now. Whether that's an interest rate thing, whether that's, just a matter that a lot of these stocks have been too hot and, they need to take a little bit of time off here. PayPal had an awful day yesterday. Anything that was, higher multiple stocks really got hit hard yesterday. But not only that, Google got hit really hard yesterday. You saw Apple even getting hit. So kind of went across the board. The only stocks that were strong yesterday, which was so interesting, were the banks. We talked about the banks in the pre-market, and that's normal because TLT got hit again yesterday. So we would expect to see strength in the banks. But what I found interesting, you actually saw strength in the utilities yesterday. So there's not a lot of days where you see the TLT weak and the utilities actually going up. So that's interesting. So some of the defensive, and maybe the market was just looking to play defense all around, and that's why the utilities caught a bid. But usually when the TLT is weak, the XLU is going down as well.
All right, you touched on about 100 stocks there. I'll just talk about the Square real quick. Full disclosure, I've been taking Denny's advice and been trading this
we
a little bit.
We don't give advice, so we don't ever use that word. I'm going to get you figured out here yet. So I've been taking Denny's thoughts, we'll say, or Denny's opinions.
Okay.
We don't give advice.
Okay. We give absolutely no advice.
Zero.
So actually, Dennis, this trade has nothing to do with you. At all. This trade has nothing to do with you at all.
You don't like that I'm attacking his work. It's his birthday. I should cut him a break.
I just think technically, I was looking at, poked its head over 100 3 different times, never closed over 100. And then I was looking at the $97 level. You had 3 lows in that area. So you made a good point yesterday. I mean, I don't think it's really going to go down until, someone comes out and cuts their rating on it, or, it needs a catalyst to move lower, bounces around quite a bit. So we'll see, we'll see if it can, I don't know. To me, it just looks like this should trade in the 80 handle. I mean, it went from, 81.53 to 101.15 in 4 sessions, just because these guys bumped their price targets. This is like AMD all over again. $40, $45. This is Micron all over again. $100, $110. It's deja vu all over again. But don't want to talk my book too much. Someone asked about Netflix here, and Netflix bad 2 days trading down into pre-market.
Do we have multiple?
Yeah, high multiple Momo. Do we have any news on that, or is it just
nope.
give
Is there more
back?
news here today? Because we're seeing some follow through selling pressure in some of the Momos here today. Like Square, we were just talking about, is down. Roku is trading down here again. So maybe it's just follow through from yesterday. I mean, these things. This is it. When the trends start to break. And you get that, yesterday morning we saw it, or 2 days ago in the morning we saw it. When you get that pop into, a counter trend move, that's an opportunity there. And overnight, these things were bid up here again. But right now, they don't want to. The money managers are dumping stocks like this. That can turn. It can turn on a dime. But usually doesn't turn overnight. It usually turns in a regular session. So when you see stocks getting closing weak and then all of a sudden getting a nice pop after hours, because there's buy the dippers coming in here after hours, often you see follow through the next day. So it's often a good idea to fade those pops. Netflix and Roku and Square were all bid up again last night. And there was a good opportunity there because they're all trading the red again. So I think just continued momentum.
Yeah, I mean, you're trading at the lows of the pre-market session, which is 58 even, traded 59 and a quarter. It's kind of hard to find. There's really no double bottoms here to lean on, or man, I don't know. I don't want to say 364.49. Are we through that yet? Yep. Where are we at? We're at 358.80, folks. I don't know. 54.33, September 24th low. If you're long that, you better hope that holds.
I will say one other thing. We're going to have the jobs number here in a minute. This market is spooked here right now. So I'm concerned about this number. If this number is hot, they don't want interest rates going higher right now. This is what's been spooking the market. If this is a hot number here, I'd be scared on this market. So I think we could actually see a sell-off here if this number is hot, like a significant sell-off. So where before we've thought, it's good. If it's a hot number, it's good for the market. If it's a cold number, it's good for the market. I'm supposed to say cold. But anyways, I think either way here, I'm kind of concerned about this number right now.
Okay. All right. I tell you, there's really no good levels. Personally, I would like to see a pop here and, get this thing green, get back up for a lower risk short, because, selling this market, a big sell off into holes. So I hope it's a soft number. You get a little pop. I will broadcast the numbers for you. Spencer will give you the details. And Dennis, and whatever. I hope things are going good to you through 8:35. We got a guest coming on, so
I'm gonna go hop off and trade.
Yep. Okay.
All right. Well.
All right.
Yeah.
Got a preview?
Well, yeah. Here's the consensus on the numbers. It's going to be about wage growth again. So I'll give you the non-farm payroll estimate, consensus estimate at 185,000 jobs is what we're expecting to see. Unemployment declining from 3.9 to 3.8%, but we're looking at wage growth. Consensus estimate there is we're going to see 2.8% year-over-year growth for wage growth or average hourly earnings. The last time we saw an increase like that was February, and we all remember what happened at the beginning of February. So the number is out now. Brent says it's worse. I'm trying to talk and read and look at the same time, and I'm having a hard time doing it. Joel, if you get the numbers. Oh, here we go. Non-farm payrolls for September. Whoa, 134,000 versus 185. Oosh, big miss on the non-farm payroll estimate there. Joel, are we seeing anything so far? Private payrolls?
Yeah, we're rallying.
Private
so
payrolls.
far, this is nice. I love to see this. I love to see a little rally here. after yesterday and the big decline in the market, 1550. We got to take out that pre-market high here. So far, we've come up a little bit shy. They like the number. They like the miss this time. The economy is not as hot. They won't have to raise interest rates as much. So we are getting a little bit of a relief pop here in the S&P futures, but really get going to the upside. You got to take out that pre-market high at 1550. We haven't done it yet. Bank of America's getting hit just a tad, giving back because they want higher interest rates, but starting to fade here a little bit. Where did we get to on that pop? Oh, man. Oh, we did get close to the pre-market high. Your pre-market high was 1550, and we just missed that. We got to 29.15 even. So another number there. We backed off, and usually I like to give you guys like levels, and I could really say, hey, I really like it here, really like it there. This is such a loose range that we're in right now. I think you could have a day where you chop around where we're right now between 29.05 and 2015 the entire day until the market decides. But as of right now, we're holding gains. Mid-range on the session is right at the close. So keep an eye on your closing price. That was 29.0775. 29.08 is mid-range, and we're holding some bids here. What else do we want to look at?
Right.
As I said, Bank America's flat. I don't know. I'm looking at my screen here. I'm looking at the top 10 components, and I'm just not seeing a ton of trades here. I mean, I see the SPOOs bouncing around like a ping pong ball, but I don't see anything popping around. So we got let Dennis trade here for a few more minutes until we got our guest coming on at 8:35. Good stargazer. Gold is getting a little pop off this, but if it's not that hot of a number, then it's not inflationary. So I don't understand that move. Gold is up 640 at 1208. That's still been in a trading range here. Gold has been in a trading range for quite some time. Let me give you that trading range. That trading range has been 1180. The top of that trading range is 1220. So keep an eye on gold, still in that trading range. Let's see what the TLT is doing after getting just absolutely slaughtered yesterday. TLT is still down, so there's still worries here. We did take out that major support level just above 116. And so TLT is not getting a big bounce off this. And banks are unchanged. So Spencer, what do you see? Anything else moving off this number?
Nope. And just to recap here, so a miss on the private and the non-farm payrolls. Unemployment did come in lower, 3.7 versus 3.8%. And I mentioned the wage growth, average hourly earnings came in line both on a year-over-year and month-over-month basis. So in line is definitely, I mean, the miss, like you mentioned, Joel, is good for the market right now. In line, that's good for the market.
Just undecided. The market is just undecided here. Been in a trading range since the quad witch when we made that all-time high on that Friday.
DLT is selling off.
Yeah.
We're selling off here again. They're saying rates going higher anyways. So you know what? I don't like the spot market rally here. I think this is a fade. And so we rallied here 5-6 points. We've given it almost all back. I don't like it. The banks are starting to catch a lift here now again. So the banks got hit initially on it. TLT's tried to rally. TLT's falling out of bed here again. So they're still thinking rates are going higher. So I don't know, man. Market is spooked right now. It doesn't even matter. This number should have popped the market. It did not. That's not a good sign.
Yeah, and just as you're talking here,
it's not. It's giving it back, man.
Yeah.
I shorted a little bit of that spike. I wish I would have shorted more. Got up to 290 on the SPY a couple times, but we should see a pop on this number. Like really fundamentally, this is saying that. Well, what was the number it give us to us again, Spencer? Just to recap here. So we missed, right?
We missed on the non-farm and the private. Yep.
So you would think soft number. You would think, okay, well, maybe that's gonna cool the Fed a little bit here. But so I would think TLT should spike on this.
They revised the August payrolls up 270 from up 201. So there you go.
They always do that.
August upward revision here. Careful under the low. The Today's low, 29,075. Yesterday's low is a good 13 handles below that. But time for a break, Spencer? Time for a guest?
It is time for a guest. Dan Russo will join us in a second. He is the Chief Market Strategist at Chaikin Analytics, and we'll be right back with Dan. All right, welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by Dan Russo. He's the Chief Market Strategist at Chaikin Analytics. Dan, how's it going this morning?
It's going well. Some activity in the market. So kind of been a steady, boring market, if you will, until yesterday. And now the jobs number today, I view this as a positive number for the market, just because it kind of shows that, maybe we're not as hot as we think we are from an economic standpoint. I think that if that number beat estimates, we could have seen a big down day and a rip higher in yields.
You know what, Dan? I was going to say the same thing. We got the nice pop, but they're giving it back. This market is trading in the red here now. It is spooked right now. So
Sure.
I would have said the exact same thing. This number, and I said it before, I was like, if this is a hot number, we're probably going down. This number is soft. We're still trying to go down. So I don't know. Is this just profit taking here now? Like we saw the money coming out of the Momos here yesterday, Square getting hit, Netflix getting hit, Google getting hit. And now we're seeing, the market sell off on a pretty soft number.
Yeah, I am a little bit surprised by that. I do think that there is an element of profit taking. I think investors are kind of squaring up their portfolios. Remember, earnings season is really going to start in earnest next week. On Friday, we'll start to get the reports from the bigger banks. So I think it just could be some position squaring ahead of earnings. I think we're going to be listening for what companies have to say in terms of wage pressure, and that could be an interesting number that came out today. If companies start talking about wage pressure, right? Really, a lot of the Momo stocks really started to come off early this week with that news out of Amazon, right? When they were increasing minimum wage to $15 an hour for all their workers, and that weighed on the other retailers, which within consumer discretionary, which as a group has been strong, but it's really been narrow, right? The leadership in consumer discretionary has been Amazon, some of the other internet retailers, and then the traditional retailers that coincidentally at the end of last year were left for dead. But I think if we start to see some wage pressure, that could be what spooks investors, and I think we're going to be listening for that, as well as trade tensions on the upcoming quarterly conference calls.
All right, Dan, you sent out some charts, and I want to get to them in a second here. So first, I'm going to pull up this chart of the spiders, the SPY ETF, obviously not accounting for this morning's session here, but tell us what we're looking at here in this chart of the SPY.
So yeah, the chart of the SPY is our version of the S&P 500 with a lot of the Chaikin indicators that we use on a daily basis. And you can see, once we broke out through the 2873 level of the highs from January, and now it seems like we want to pull back and retest them. I think that as long as we're above that level, the bullish structure of the market remains intact. We look at Chaikin money flow, and that's been persistently bullish really since the May timeframe. So that for us is an indication that institutional investors are buying stocks. And what's interesting as well is that even with the pullback yesterday, we have a proprietary overbought, oversold indicator that we use. The SPY is actually oversold. So I think that as long as we hold above 2873, the bullish structure remains intact, and you can use kind of these near-term oversold conditions to look for strong names and strong industry groups, right? Leadership remains the same. Healthcare has been a hot sector. Technology has been a hot sector. Coming on is that that new communication services group, and one of the groups that we've been kind of focused on of late has actually been the industrials. We have a kind of an interesting way of looking at the sectors, right? Because we rate all the stocks listed here in the U.S. Based off of our power gauge rating, and then we can look at the sector level to see the ratio of bullish to bearish stocks. And one of the groups that's slowly been climbing the leaderboard over the past couple of weeks in terms of that ratio has been industrial. So those are some of the groups that I'm looking at for long ideas. And if you look at the bottom of our chart there, we just show you the relative strength of the SPY against the IWV, so the broader Russell 3000. And you can see some real intense outperformance by the S&P 500 relative to the SPY. And our work indicates that that's a function just of large caps outperforming small caps. We started backing, we had been bullish on small caps on a relative basis throughout the first half of the year, and then really kind of like the late July timeframe started backing off that call, and that's been kind of a good call from a positioning standpoint to kind of overweight the large caps relative to small. I do think that trade is getting a little long in the tooth. I was looking at a ratio earlier of the IWM against the SPY and overlaid it with an RSI indicator, and it's for the first time really since the beginning of the year, it actually hit oversold conditions. So I kind of look at that two ways. I think that confirms the weakness, but at the same time, here and now, I don't like pressing the bet on small continuing to underperform. I wouldn't be surprised to see a near-term bounce.
What about the TLT here? We've had, I'll bring that chart up that you sent over here. We've had a couple of volatile days, unusually volatile days on the TLT. Kind of give us your thoughts there.
Yeah, I'm in the higher rates camp. So if you're trading TLT, it's lower for the TLT and higher for rates. I think that really for me, the key level was at about 2.6%, which we broke through earlier this year, and then chopped around. Chart that I sent to you has the 200-day moving average. So as we were chopping around, it was really giving the average some time to catch up, and now we've bounced higher, gone through 3%, took out the May highs at 3.1%. I am in the higher rates camp, but I think you have to look at it within the context of today's number aside, the economy is strong. So higher rates is a function of a stronger economy, not necessarily a bad thing. I've actually looked at the data going back to the 60s, and I've looked for instances where the 10-year yield is higher than it was a year ago, but still under 5%. And that's actually a really bullish environment for stocks. So for us, as long as the rise in rates is gradual and under control and a function of a stronger economy, we don't see that as bearish for the market in general until we get closer to 5%. But that being said, different sectors of the market are going to be impacted differently, right? I mean, real estate stocks have come under pressure as rates have gone higher. I'm a little surprised at how utilities have acted. Lately, utilities have actually been strong on a relative basis. So it seems like defensive positioning is winning out against, utilities declining in the face of rising rates for now. It's an interesting dynamic that we're keeping an eye on. I wonder how long it lasts, but, and so different sectors are impacted differently, but the market in general, as rates go up, we're not concerned until we get to about 5%.
And I wouldn't have brought this up, but you sent over a chart of Tesla here. But how can you fundamentally value this company right now? It almost feels like we're talking about Bitcoin last December, because it's subject to these two, God knows what from Elon Musk's Twitter feed, and it makes moves off of ridiculous tweets. How can you even begin to value a company like Tesla when it's in the news every day?
Well, that's interesting, and that's why I shared the chart, because a name like Tesla is so bifurcating, right? The people who are bullish, investors who are bullish on Tesla, are dogmatic in their view, and nothing that Elon Musk does seems to change that. And bearish investors likewise are dogmatic in their view, and it's an emotional stock, it's a bifurcating stock. It's in the news, right? Elon was, I guess they let him have his phone back last night, and he was tweeting again. And the reason I included the chart on Tesla is because listen, they are a real company, right? With a product, they have sales. So you can start to look at valuation frameworks and some of the key metrics that matter to driving stock performance. And the reason I included the stock today is just the chart is because a big goal of ours and for our clients is to get people to kind of put the emotions aside, those dogmatic views that crop up around names like Tesla. We say, let's take a step back and look at it objectively, and the way we do that is with the Chaikin power gauge, right? Mark's been on this show a number of times. I'm assuming viewers are familiar with the Chaikin power gauge, but at a high level, it's a 20-factor model that looks at the potential for a stock. It's 85% fundamental, 15% technical, and it looks at kind of the key factors that drive stock performance. And Tesla has a very bearish rating. It's had a very bearish or a bearish rating for the majority of the past 12 months. And if you look, interestingly, relative strength, which we think is a really, really important factor in looking at stocks, for the most part, over the past 12 months, Tesla has been an underperformer. So kind of put Elon aside and your views about what he does. And, if you're bullish or bearish on Tesla, if you look at it from a purely objective, unemotional standpoint, it's a bearish stock and it's been underperforming the market. Having Tesla in your portfolio for the past 12 months has not helped you. And if you kind of looked at it objectively and stepped away from the noise, you could see that. And that's why I thought it was interesting in light of Elon getting back on Twitter last night.
We are on the line with Dan Russo. He's the chief market strategist for Chaikin Analytics. Dan, do you mind if I go like big macro here for a minute? Because we're drilling down on a lot of individual stocks. You mind if I throw a tough macro question at you?
Sure, I'll do my best.
Okay. So, you had different things, different tops in the market, right? You had, the tech bubble in 99, 2000. You had the housing crisis, financial crisis in 2008. Market's definitely a different dynamics, but one thing that really worries me, and I just can't get it out of my head, is something that the president said. And he comes out and he says, everyone should thank me for the stock going up and making all this money. Is that something that you want to hear? If you're looking for a contrarian indicator, the president of the United States coming out and making comments on the stock market, his policies aside everything, isn't, everything that's going on with the administration, the trade wars and everything, doesn't that make you a little bit nervous? And also, we could talk about bull market, bear market, technical things. What would, in the S&P 500, a breach of what level would make you say, hey, the market's turned here. We're going either into extended correction or a bear market.
It's a great question. I think kind of the best way to kind of look at President Trump is to say he's been unconventional from day one. And I wonder if that more than anything else is what people's biggest gripes are with him, right? He's kind of the first president to really use social media in a big way. And he's not your traditional politician. And I don't have an opinion on that, whether it's good, bad, or indifferent. But, we are sitting here right now with a really low unemployment rate. The economy is humming along. And listen, I'm not saying President Trump deserves 100% of the credit for that, right? Because we know the economy, operates with a lag, and some of the policies that President Obama put in place are certainly likely to be helping out from an economic standpoint. But it's hard for me to kind of quantify something, a comment like that. Everybody should be thanking me, but and again, I just try to look at it objectively. So for me, I think that if we break 2873 on a sustained basis, that would be concerning. And then below that, kind of 2800, and then because over time you're going to start to get that 200-day moving average, which has been creeping. It's been creeping up. So from that standpoint, one of the things that's kind of caught my attention of late, kind of from a sentiment standpoint, a more qualitative aspect of what's going on, is we've seen some headlines lately about the number of unprofitable companies that are going public, which is kind of interesting because for a while now, there has been somewhat of a dearth of IPOs, right? Companies are staying private longer, and that's a function of a robust venture capital and private equity market. Names like, if you think back to the tech bubble, right? A name like Uber would be public by now, but they don't have to go public. So I do kind of find it interesting that the names that are going public and getting funding are unprofitable companies, and the deals are getting done. To me, more than anything else, I think that's the qualitative data point that's kind of caught my attention of late, because in an environment where VC funds are flush and private equity funds are flush, and I mean flush with capital to make investments, and the high quality names in such as an Uber are not public, yet these unprofitable companies are actually coming out and the deals are getting done. That to me bears watching.
All right.
Now, I'm not saying I was in college in the late 90s. I started my career when the week that AOL bought Time Warner. So I'm not saying that it feels like that, but it's a qualitative data point that's kind of cropped up lately that caught my attention in light of the fact that the better companies are staying private. And now you have what, from a profitability standpoint, looks like lower quality companies coming out and actually getting deals done.
All right, Dan, before I let you go, I want to look ahead for a second here. With earnings season kind of starting next week with the banks and really kicking into high gear the week afterwards, is there a particular sector or industry you're most excited for in terms of upcoming earnings?
You know what? We like healthcare. We like tech, and we like the industrial sectors. Those have been kind of the parts of the market that we've been focused on for long ideas for the past few weeks now.
All right, Dan Russo has been on with us. He is the Chief Market Strategist at Chaikin Analytics. Dan, thanks so much for the time, and have a good weekend.
Guys, have a great weekend. Thanks for having me.
All right.
Take care.
Joel, let's bring it back to the S&Ps. What is happening?
It is. Yeah, it is, Dennis. It's going to be a tough day here. We went down to 98 and a quarter, now back up. I mean, this could be one of these days where you trade up and down between the pre-market high and low the entire day, go up, maybe make a new high, and then fade back. I think the market is really just at the decision point. I think the best thing would be, if we could hold, yesterday's low, and even if we, close above 2,900, I think that's a best case scenario for them. I just don't see us ripping up through the pre-market high, climbing back 29.20, 29.30. Just feels like there's too many nervous people out there to have that kind of rally today.
I don't know where we go here. And, we've sold off pretty hard yesterday. So is there going to be some buy the dippers down here? Yeah, these guys don't go away. There will be. And they just did. Spinner pointing it out. They did just buy that dip when we went all the way down to under 289 on the SPY. That being said, I still think this market is spooked. I still think path of least resistance actually in the short term is lower here. I don't like the fact. If you would have told me this number, I would have thought the market would rally on this. It rallied and then gave it all back immediately. It's telling me money managers are still spooked. Now you get some people buying the dip, say, now it's a good number, we got to buy this back. But TLT not responding here well at all. It's not bouncing. I mean, as long as, they're starting to get, like, if we're going to have rates climbing as fast as they are, I mean, this TLT move is significant for the overall market in the last few days. So if rates are going to start to fly up here at the long-term stuff, it's not good. It's not good.
What do you think? What do you think the market? I mean, he said 5%, and I think he was referring to the 10-year, Dennis. I mean,
you're going to have a housing bubble implosion. You're going to have so much stuff, especially Canada, because Canada tries to chase the rates too, and they're trying to raise rates over there, but they got a housing bubble, and if they start going up 4 or 5, it's people who start losing their houses. I mean, they're not, and we obviously saw a housing crisis here in 2007, 2008. Canada kind of didn't get it. But I'll tell you, Toronto pricing, Vancouver pricing, even pricing where I'm in Windsor, the housing prices have gone skyrocket high for years here now. It's built on low interest rates. If interest rates, if the long-term stuff starts to go over here and then it starts climbing Canada as well, that's not good for, the economy at all. because this economy is not, just built on housing. It's built on a lot of things. But we've pointed out in this chat, you look at autos, you look at so much stuff as interest rate sensitive, housing, autos. I mean, there's, and yeah, sure, at a certain point, the banks like higher interest rates. Yes, they do. But again, you've got to think short-term, long-term thing. They're lending short, they're lending long, they're borrowing short. So is it good for the banks? Yes. But I mean, financials have been underperforming this market for a long time. So could we get a little lift there? Yeah. But overall, when interest rates start to climb, it is not good for stocks. So maybe the banks can be an exception, but everything else is not good for it. So this is a concern. Like we look at the TLT, it started September up at 122. We're at 113 here. This is a big move, man. This is a big move in rates.
Yeah. And I want to share something. You were off yesterday. We did our interview with JC Peretz, and very informative interview. And what his thesis is that, okay, people are bailing out of bonds. Okay, they're bailing out of this, but the way he's looking at it, the yen, the currencies, he just thinks it's all going to be coming to the U.S. market and the U.S. equities. So he thinks that because of what's going on in the bond market, that there's just like, a undefined bid underneath the market. I mean,
there is in the U.S. I mean, the U.S. markets have held up so well, and we've compared to this for a long time. And I've had some tweets, some stuff out. I mean, China is significant. Emerging markets are a mess here. Here's the EM. I thought the bottom was in. I actually bought a little Alibaba there for a swing trade, kept some in my long-term invest portfolio. Should not have kept any because it looks like it's ready to break down again. I mean, so you got the emerging markets are a mess. You've got, Europe is still in a world of hurt here. I mean, you have problems over in Italy. We've talked about those, but you look at these European banks, they're not looking healthy whatsoever. I mean, a lot of the other world markets have not performed well at all. If you look at the Canadian markets relative to the US in the last 5 years, Canada's basically gone nowhere, and the US markets have more than doubled. So, I mean, this has been the best place to be. Maybe it continues to be the best place to be. But at a certain point in time, if you're a money manager and you're seeing everything else have problems around it, at a certain point in time, it's a global economy. It's going to spill over. So I'm just saying, I'm not saying getting all bearish here and saying you got to sell everything out of your invest portfolio. I'm still fairly fully invested. But I'm just saying, if you're a money manager and you're managing money here, why not book some profits in some of this higher multiple stuff? And that's what we're seeing the last few days. We are definitely seeing a rotation from growth to value. I've always been more of a value investor, so it's actually helped my portfolio the last couple of days. But I mean, the squares, I think rallies are to be sold now in Square. I don't, it looks a little bit broken here, at least in the short term. Maybe it turns it around, but the Rokus, the stuff with the high multiples, that was some good technical damage done yesterday. And I think there's some people spooked in these things now. So I think if Roku was to lift up and get up to $70 here again, I think it's a short opportunity. So I think the easy money has been made in these stocks. And that's what it's more rotation. It's more rotating still out of the Momo and into value. And you're going to see relief pops. Those are the pops, I think, to get, lighten up if you're all Momo, because there's definitely some rotation. Money managers are still, the big money is still what moves the market. Everybody thinks it's bots. You see these tweets all the time. Oh, it's the algos doing this, the algos doing that. The algos are noise. They're not making your big moves. Your big moves are still made by your money managers. They're coming in, Fidelity coming in saying we're rotating out of this. They're going to sell a few million shares of something. Stock's going down. That's how it works. It's still institutional money that moves money around. And right now, the institutional investor is a little bit nervous on the Momo stuff. That can change. But right now, from the tape that I'm reading, is that Momo rallies, I think, are to be sold.
All right. I just want to ask you here about GE. And man, oh man, you talk about climbing back. I mean, it had that wild day earlier in the week, and then it gave it back. RBC called it like the best idea ever that they've ever had in investing yesterday. I mean, I don't know. I'm torn about it. It's one of these stocks that, like, if the market really, starts to sell off, it's one of those stocks that you don't mind owning, right? I mean, it's a terrible performance. You know what I mean?
But it's a value. It has been a value trap, yeah. But it fits that description of a value stock.
Yeah.
People are buying G not for growth; they're buying because they think there's value there. And that's what we're seeing. We're seeing those stocks show life. It hasn't just shown up today. It didn't just show up yesterday. We've been talking about this value trade for a couple of weeks really here now. It's really shown up hard, but I bought the Cardinal Health. So here's a class example. Cardinal Health a couple months ago when value started to look a little bit healthier, and it has. I mean, the last month for value stocks, they've been healthier. Cardinal Health's up 10% last month. Classic value stock. So, I mean, you just start looking and you see, hey, IBM. What is IBM? That's value tech. And, sure, some of your semis haven't performed well, but Intel's shown some life. We've talked about that. It really turned in the last 2-3 weeks. You're starting to see value names start to show life, and you're seeing, the momentum names really weren't getting sold, but now they are. So it was kind of like maybe buy a little bit of everything, but value was starting to show life 2-3 weeks ago. Now it's really starting to show some life. When utilities can trade up on a down TLT, that's telling me the value trade is stronger than the higher rates, because XLU should trade down when the rates are going higher. But right now, XLU is seen as value. It's seen as defensive. It's seen like, I don't mind getting a 4 or 5% dividend.
No, I love
if
that.
The market's going to start going down. So we don't know what the S&Ps and Dow has been held up because value names are holding it up here right now. But there is a little bit of technical damage in some of the momos here, at least from the last few days. So all I'm saying is, I'm not saying, get out, this is the top, this is it. I'm just saying you're 1% off the highs. If you're looking to lighten up, you got lots of opportunity here. We're not far off. So I'm thinking there's might be some money managers that are a little bit nervous still out there.
Okay, Spencer, we've got a minute over here. You want to wrap things up and preview next week's show?
Yeah, I can wrap things up. Next week's show, Nick Shaheen will not be with us on Tuesday. He'll be traveling, but we do have another guest in his stead. We'll also be joined by Ivan Feinseth and Marie Band. Mies Schneider will join us. So a lot of good guests slated for next week's schedule. But as far as today's show, if you missed any part of it, you can catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play. Also, the Benzinga FinTech Summit's coming up in San Francisco, November 14th. I mentioned this at the top, but if you go to bzsummit.com and enter the promo code PMPVIP, you will get a free ticket, not discounted, not like half price, not full price, free ticket. PMP VIP is your code at bzsummit.com. We have a small number of those available. I think in the single digits are left. So check that out there. Also, Benzinga Pro, for those of you who want to keep trading the news all day, every day, Benzinga Pro is your go-to platform for that. We've got real-time news, real-time quotes. We've got chat rooms. We've got SEC filings. We've got a squawk. A lot of stuff in the Pro. So go to pro.benzinga.com and enter the promo code AMPRO for 25% off a Benzinga Pro subscription, good till the end of the month. Joel, did you have any final thoughts you wanted to add?
I mean, it's just a chuff fest here, unchanged. Just really want to see what happens at the outside, 29.15.50, 28.98 and a quarter. We'll be real concerned if we get down and take out yesterday's low, going into a weekend and stuff. So that's what I'm looking at today.
All right. On that note, that'll be it for us. So everyone, have a good day, have a good weekend, and we'll see you on Monday.